And then today I invited my financial advisor, Mr. Joshua Wolpe, who is from Sidelear and Associates. He recently helped the Legacy Center with financial planning. And then I was like, wow, before COVID, I never had this. So, and I always had a small business mindset to say, but I'm not ready to do this, but. So it really helped me. His experience helped me. So that's why he's in the platform, and to also collaborate and give you as our client and give you as an entrepreneur, not only as our client, but as an entrepreneur, a holistic view of services that we might not be specializing on. So to start the session is that question, wherever you are sitting and wherever you're listening from. If you're not yet in business, also ask yourself, why are you going to business? But if you're in business, ask yourself, why are you in business? Me, I'm in business to make money, and I'm in business to create value, and I'm in business to generate wealth. And I would love my great-grandchildren to be very, very comfortable in life. So there is more personal drive than obviously the other drives. And I think as an entrepreneur, I love being the freedom that comes with entrepreneurship. I love the adrenaline rush that comes with entrepreneurship. So that's why I wouldn't be in corporate, I would die. But obviously we need people in corporate. So I incorporate, I die. So you must answer that question. You can always put it in the chat box to tell us why exactly you are in business. But I know we are here to make money, all of us. There's one common denominator, is to make money. So what it means to be an entrepreneur, it really means taking risks and taking opportunities. It's very risky. At the same time, it comes with opportunities. We all have been awakened by COVID, how risky it is. As an accountant, I've seen businesses that were making, to be exact with you, that business was making 1.9 million a month, and then it went to zero. Unfortunately, it's in the tourism industry. It's not one of my clients that I hear, so it's a generic example. I've seen businesses that really were thriving. They were in the growth stage. They were about to transition to growth, and they were taken back. So those are the risks that unfortunately comes with entrepreneurship, where people loses problems and turns them into solutions. We are people that makes decisions every day. Every day there is a decision that has to be made. The decision could be about an employee. A decision, when an employee is sick, it affects you. When there's a death in the employee's family, it affects you. Somehow, whenever there is an issue, we look up to you. So it's things like that comes with entrepreneurship. It is a lonely journey, yet fulfilling. Some people will say it's not lonely, but I'm not saying lonely in a terms of, what, I feel alone, but it's unlike going to work where there is a team. We chose this entrepreneurship. The last day I walked out of corporate, I was alone. I wanted to start this journey. Yes, I had advisors and stuff, but this thing is actually on you. So that's why this platform as well. And then it's a journey of responsibility. Every day it's all about responsibility. We are responsible for our employees. We are responsible for anything that happens in the workplace, and. So it comes with that. Before I give it to Mr. Bob, I want us to have a view in finance. I always tell people, when my mother is 81, so you can imagine, she doesn't understand what on earth I do. Most when they say you are CA, it comes with some glorified, people are like so proud of you, but my mom doesn't understand. So I have a very simplified way to explain to her what I do. I always say I'm a doctor in finance. So I always say, Mom, you see doctors, whenever we're sick, we go to doctors. So I always say, when finances and businesses are experiencing financial issues, it could be auditing, but I'm auditing finance. It could be tax planning, but I'm planning about money. So it's actually, so I will give you a view on finance as a financial doctor, I guess. But yeah, so there is financial planning, there is financial management, there is financial reporting. Sometimes because of how the words sound, we mix up the 2 and the 3. So financial planning is really a step-by-step approach where you meet one's life goal. It talks about one's life goal. So you can see that it's individual in nature. So financial plan, it comes with planning how your expenses as an individual, how your future would look like. You have to have a document that is called the financial plan. So unfortunately, as entrepreneurs, COVID has also proven that entrepreneurs, because in the workplace, we all have a retirement annuity, it's part of our salary structuring. Entrepreneurs don't have a financial plan. And it's something that we play around with. I know a colleague who's very close, who was driving a very nice car and who played around his car insurance. And now he went into an accident. He doesn't have a car now. He's an entrepreneur. I know people who doesn't have life covers, and COVID came. Obviously, I don't. With by God's grace, I don't have a very close person who passed on through COVID. But it's cases like that as an entrepreneur, what could happen in cases like that? So it means we need to really think deep and hard. Another issue about financial planning, because we are responsible for our employees, we then take a bit of onus to make sure that our employees also understand. That's why a lot of employees would not rather work for corporate than small businesses, because small businesses, we think we pay you a salary, you look after yourself. So as entrepreneurs, we have a responsibility to sit our employees down and say, do you have a life plan? Do you have a cover for this? If you don't have the company, what can we do as a company? I have recently worked with a client that got its employees medical aid, and they chose to fund. They said, if you want a medical aid, here's an option. We have different options. The company will go as a company, but you can pay for that medical aid yourself. So as much as we think we cannot afford medical aid, but employees would be happy to have medical aid through the company because it comes with benefits. Josh will go into that. So then that's financial planning. Financial management at the other side is a strategic planning, organizing and directing, controlling and undertaking of organization or an institution. So that's where you actually would say financial plan versus a financial management for business. So business, whenever we talk about planning in business, we are talking about financial management. It comes with budgeting, it comes with profitability analysis, assumptions, forecasting, which I'm running this series. The next time we meet, we're going to talk in detail on financial management. And then we move. It talks about cash flow, making sure that you have enough cash flow to cover expenses. Can you predict? Obviously, during COVID, we could not do that. But imagine if every income that comes to the bank account, you take 10% to save it. People would not have suffered the way we suffered during COVID. Then there is financial reporting. Financial reporting, that's where you need Abo Millycent, the CAs who went to school, they know good there is financial reporting framework that wants financial statement to be prepared like this. It's a communication of financial information from companies or from individuals. So that's fine. Most of us do financial reporting because of compliance. We don't do it for decision making, but its purpose is for decision making, and it's also obviously for compliance and things like that. That is a view in finance from your financial doctor. But otherwise, how do you go about it? I'm not going to delay this one. You must write your own financial goals, personal financial goals first. I want to retire at 40. That's me. I hope it will happen. I want to retire at 40. I want to live a very comfortable life. I want to be financially free, that I can cover the next 10 years of my life. I can actually cover my child to study overseas. I can. How do I do it? I will actually run 3 companies. I will run this company. In this company, I expect to get a return of this much. In this company, I expect to get a return. I'm going to earn a salary. I'm going to give myself, the business will give me a dividend. So you are actually structuring these things, a dividend, a salary. I'm going to get share buybacks or share bonuses. So you are writing your goals. A lot of us as entrepreneurs, we don't have these financial goals. It is unfortunate because these financial goals will actually determine how we make decisions about our businesses and about our ventures. And then link personal goals with business goals. Those two must link up, because sometimes you find Millicent has a good heart. I'm always giving, church, Obviously, I'm not saying we mustn't give, but it's not part of my goals. Did I say I'm going to donate money? What entity do I donate to? Does it have to be a public benefit organization? And then look at different investment options. Is it long term? Is it short term? What is it covering in my life? And then implement the plan. You need a financial advisor. Thank God I have Mr. Settle and is here for us. So look at it as a portfolio rather than an individual exercise. And then monitor the right financial plan with the right financial advisor, with the right accountant. I always say business people must at least have these people. And an accountant, make them your friend if you can. Every time you make a big decision, say, what spreadsheet should I use? What does it make sense? What scenarios does it have to happen? Most of my clients, I don't know. Yes, we give them management accounts and what. I don't like, Millie, I'm about to make this decision. I'm buying a car. It's my birthday. I work hard. How will it impact me on my tax? Yeah. So that's actually monitoring your financial plan. Okay, let's see before. Yes, and then we're gonna cover this on integrating of financial personal goals, wealth creation. I already went through that. And then if you fail to plan, you are planning to fail. It's a famous quote. We all know it, but we don't imply it, especially as entrepreneurs. Directors in a corporate place, they have structures. In HR, they structure their portfolio, they structure their salaries, they look at the tax bracket, what is good for them. But entrepreneurs, because we don't have a board, we don't have someone we report to, we don't plan that part of our life. That being said, I'm going to take it to Mr. Sedlo. He's going to introduce himself even more, and then he's going to continue with the presentation. Thank you. And then I know that I was not talking to you. We will talk. You can put your comments on the chat box, and you can also raise your hand to ask a question. Thank you so much.
Evening, everyone. Hope everyone is doing great. Thanks so much for coming to attend our event this evening. Really enjoyed that, Millicent. Thank you. So when it comes to insurance, I think most of us here can agree it's a very misunderstood industry. It's a huge industry, and it's one that leaves many people frustrated and disappointed for a number of reasons. And by the way, as Millicent said, please feel free to add any comments as I'm speaking, then we can address those questions or queries throughout the Zoom. So one of my personal beliefs is that a lot of people fall into the trap of call center policies. You get a call, I'm not going to mention any company names. You get a call, and before you know it, you've signed the policy in 10 minutes. Now, what I don't understand is how can you sell someone a policy when you don't even know two things about them? So you really have to look at what the client needs. I will not recommend any policy without having a conversation with you first. Any good financial advisor will do that assessment to see what is this client's needs, what are their objectives, what are they struggling with, what are their fears, what are their long-term goals, what do we need to protect them from with inevitable risks. And also another very important point is that I'm an independent financial advisor, meaning that I don't work for Discovery or Sanlam or Old Mutual or anyone. I have broker codes in almost every insurer, so I can recommend any particular product. And I do find it deeply problematic when you get a company representative coming to you and giving you one option. I mean, if I was working for one company and I don't show you any of the other options with the other companies, do you really think you're going to get the best deal? So that's where a good financial advisor comes in, unbiased and listening to what the client needs without just rushing the sale, you know. I can go next, Melissa. So, as a financial advisor, I'm mostly specializing in corporate policies. I also do individual policies, but this is why this topic is also really important for me, for entrepreneurs. As Millicent said, a lot of entrepreneurs don't know the the type of financial planning that they need to implement for their company, because you're left alone as an entrepreneur. There's no one to guide you. So when it comes to policies for corporate companies, we've got to look at how to combat the inevitable risks, such as an employee getting injured. You have to pay them out. You have to pay for their hospital fees. You have to pay for their income while they're working from home for 2 months. You have to pay for their funeral payout, their life cover, disability payout. You know, these are things that employees are going to come after you for if one of these events were to happen. And then you're going to have to pay the bill. Otherwise, you're going to go to courts and fight it out there in a lot of cases. So, although I know it can be a daunting thing to look at company policy premiums at the start, but when you're actually looking at the inevitable risks that you're combating, it's going to save you a lot in the long run, and it's not going to just pay out your employees the minimum. It's going to pay them out a big amount coming from the insurer for a relatively fair premium. So another thing to also consider is boosting employee morale. When you think about working for a company, you want to work for a company that looks after you and doesn't just see you as a number that provides income to the company. So it's also another good way to also add value to your employees' lives through these risk benefits. And not only through these risk benefits, but also through retirement planning. If you as an employer come to the table and say, we will contribute 5% of your salary every month towards your retirement, and that employee also contributes 5%. By the time that employee is 65, they can be sitting on 4 or 5 million rand. I convert that into a living annuity and they get, say, 40,000 rand a month for the rest of their life in a comfortable retirement. So, as Melissa mentioned earlier, you know, financial planning, the sooner you start, the better. And it goes both ways with the employer and the employee. So, with corporate policies, there's a number of different products on the table. Obviously, medical aids. We all know medical aids is to pay out if your employees were to get injured or ill. There's a number of different companies and plans. Personally, I mostly deal with Discovery Medical Aid, although I do also. This is an advantage for Can't really hear you ever speaking. Can you repeat?
You can continue to as someone who was not muted.
Okay. Yeah. So medical aids, I do deal in a few companies, Momentum, Discovery, Old Mutual, Fed Health, but from my experience, Discovery is the best. There is 23 plans on Discovery. So there's not really much to debate there. They are the biggest and the best. If you have a small company and you are not really in a position to afford the cost of medical aids, they are expensive for the amount of cover that they offer. You can go for straight hospital cover, which is about 500 Rand a month, meaning that your employees will not be covered for any illnesses, diseases, anything. But if they were to have an accident, such as a car accident, or if they were to break their leg, they would have full private hospital admission. So for that 500 Rand a month, it is quite worth it if your budget isn't quite there for the medical aids. Risk benefits, it comes down to life lump sum, funeral cover, income protection, chronic illness cover, disability cover, and a whole lot of other things. So, as mentioned earlier, those risk benefits are to combat the inevitable risk of having to pay out as an employer, and just to know that your employees are looked after and their families will be paid out if something were to happen. Provident fund and retirement planning, as mentioned earlier, normally goes on a scale of 5%, 5%. Number of different companies. Old Mutual normally comes out best for small companies due to their low costs in admin and other costs involved. So depending on the size of your company and the average salaries, different companies will be better, but Provident Fund is very good for long-term retirement planning. Short-term cover comes down to ensuring your building.
Josh, can I say something?
Yeah.
So it seems like I have a free plan. I don't know when it changed. So when you are logged off, you can log into this link again to everyone.
Oh,
Okay.
is it gonna cut off?
As far as I know, I have a paid plan, but then now it's disappointing me. So yeah, I don't know.
Okay,
I'm
well,
trying to manage it. So, but if it cuts us back, we can log in again.
okay, awesome. Yeah, if it cuts out, let's just all log back in. Yeah, so short-term cover, buildings, cars, um, protecting. You can even insure electronics, whatever you want to insure. Short-term cover, you can think of it as insuring a material object that you can see and feel. Will drafting says in the name, free will drafting. It is a benefit that I offer to all of my clients whenever they need. I send out a consultant to do their will. That is 100% legally binding, and also makes any other will that they've done previously unwarrantable, because I think wills is something people neglect. It's not a nice topic to talk about, but it is very important to have a valid will in place, especially if you have life cover. If you don't have a will in place, the money can be put into a government guardian fund, and you can take years to get that money out, especially if you have children under 18 that are your beneficiaries. And obviously, if you have previous partners or current partners and things aren't clear, then there can be long-lasting disputes. So it is very important to get your will in place that states very clearly who gets what, so that you know that everything will be sorted in the unfortunate event that you pass away. Now you can go next, Millycent. Yeah, so retirement planning, as we can see here, it's very sad that only about 6% of people can retire financially independent. That's why it's important to start young, and we convert those retirement funding, those provident funds for the companies into living annuities. Pump as much money in there as you can and give yourself a monthly income for the rest of your life. There's a number of different investment structures, which I'll also go into for individual policies. For companies, it's mostly only the provident funds. But if it is a small company of under 10 to 15 people, then it does also make sense sometimes to just do 10 individual retirement annuities or 15 individual RAs. Basically works in the same way as a provident fund. You can only get the money out at 55, and you're stuck into a recurring contribution. And there's a number of different legislations on how the money can be appropriated within that fund in order to protect clients from losing that money. Because when it comes to a retirement annuity or a provident fund, we really want to make sure that the client is protected, even if they see a little less growth, because your retirement is not something that you can take a risk on. You know, when it comes to your short-term flexible investments, you can go for high risk investment and potentially high return. But for long-term investing, definitely more conservative is better. Yeah, so group health, as mentioned before, it's to give you that hospital cover that you need, GP consultations, prescription medication. Okay, so it never ended, Millicent. That's good. Yeah, so there's, just to take Discovery for an example, there's 23 different plans on Discovery, starting from Key Care Plus to Executive. Every plan has different benefits and different requirements. I mean, I think what a lot of people misunderstand is that if you're on a lower plan, not everything is going to be covered. You get what you pay for. And I do get a lot of frustrated clients saying, why isn't this medication covered? Why wasn't this covered on the lower plans? So it is really important to understand what plan you are committing to, what budget you have, and what to expect, not to have unrealistic expectations. Another important thing to consider is to also add on gap cover onto your existing medical aid plan. What gap cover does is it takes your co-payments. For example, if you were to go to a non-network hospital, you would have to pay a co-payment of about 8,500 Rand. This gap cover would save you from that co-payment, completely reimburse you for that amount. And also, when it comes to operating surgeons' fees, Discovery and all medical aid schemes will only pay up to, say, 300% of the medical aid rate. If a doctor is very expensive and they charge, say, 500%, gap cover will also kick in up to 700%. So it is well worth it. It's about 300 Rand a month more, and it's definitely worth every cent for that. Yeah, so group risk, mitigating the risk, giving your employees payout, death benefit, disability, incapacity for income protection. When it comes to income protection, you have temporary income protection. I can put the waiting period exactly how you want to structure it. If you want to make it 7 days, you get paid out in 7 days from the time that you got injured or ill. If you want to make it, say, 30 days, your premium's going to be a little bit less and you'll get paid out only within 30 days. So it's important to understand with income protection, the defining factor of that premium is how long the waiting period is. Obviously, when it comes to a longer waiting period, like 90 days, it's going to be very unlikely that you will still be injured or ill and not be able to work in 90 days. So it is always better to go for a shorter waiting period. Income protection is really one of my favorite policies. It's so important. If you, for example, if you had temporary and extended income protection and you got injured next week and you've got a permanent disability, your leg is messed up and you can never work again in the same role that you were doing, you would get paid out your monthly salary every single month, every single year for the rest of your life, going up with inflation, 10 or 15% a year, that salary will go up. So for the low price that income protection comes in at, it's really a no-brainer to give yourself that protection. It's also very good to have that monthly payout because, I mean, I do it, everyone does it. If you get a lump sum, it's easy to blow that money very quickly. if you get monthly income every month, at least if you've blown your disability lump sum payout, you're still going to get that 15 or 20K every month. And another thing to also consider is retrenchment cover. Retrenchment cover has more legislative limitations than income protection. You would have had to be working for the same company for the past 2 years, and you would have had to have not had any retrenchment cover claim and a number of other things. So retrenchment is if you get fired, and income protection is if you get injured or ill. So it is good to have both. Retrenchment is quite cheap because your chances of being able to claim on retrenchment are a lot lower. So I'm just being honest with you as an honest financial advisor. It's going to be hard to get a claim for that one. So I don't sell it that much. Business cover. I see lawsuits here. I can also insure your business for professional indemnity cover, meaning that if anyone were to sue your business for negligence, say for example, you sold someone something, they weren't happy with it, they take you to court, you don't have to worry about any money, any payout, anything. We simply put your claim in, your insurance will pay out, they'll pay out that client 9 times out of 10 before it goes to court. Everyone is happier that way. The client's happy, they get paid out. You happy, you never had to pay anything because you've been paying your premium, and the matter goes to rest from there. Property damage comes down to short-term cover, um, insuring your property for a set lump sum. If, say, for example, you insured your walls or your whatever room for 50K, and fire went through that room, you would get paid out 50K. Not much more to it than that. Same thing for theft and vandalism, loss of income. There's not really a loss of income cover for business cover itself. As an entrepreneur, you won't be able to find the policy that'll pay you out if your business goes under. But as mentioned previously, there is retrenchment cover and income protection cover. And yeah, injury and illnesses, we can give you a lump sum, say 3 million Rand for any of you can insure every employee for 3 times their annual salary or more. Say, for example, they're earning 200,000 Rand a year. I'll insure each of them for 600K disability cover, 600K chronic illness cover. And then also that temporary income protection on top of that. Can go next, Millycent, please.
Okay.
So, will drafting, as mentioned earlier, the reasons are very important for will drafting to make sure that your will is legally binding. The company that I use for will drafting is called Capital Legacy. They are the #1 estate planners in South Africa. What you also get by doing your will with them is them as your estate managers, meaning that if anything were to happen, once you sign your will, it is then put into a vault on the offsite premises by Capital Legacy. If anything were to happen to you, they review that will, they manage the estate, they make sure that everyone is paid out. They are the #1 estate managers in the country. And they also do have indemnity, legal indemnity plans. This is to protect you from estate legal fees and curator fees and other things. A lot of people aren't aware that if, for example, your will is with a bank they're going to take about 3.5% for your will. So if your will, say for example, you have 1 million rand in assets, the bank is going to take 35 grand tomorrow. On top of that, you're also going to have lawyers' fees. We all know how expensive lawyers are, accountants' fees, whole lot of other fees. Before you know it, your whole estate can be finished. So when it comes to these protection plans, they are there to protect you from these fees because Capital Legacy will be managing your estate. They are the ones that are putting their time and effort into it. They take a small fee, much smaller than the bank or anyone else. So that is also a no-brainer to also take up that plan with Capital Legacy. So when it comes to individual policies, as mentioned earlier, there are a number of different investment options. We have ordinary tax-free savings account with a limit of 40,000 Rand a year for individuals. This is completely tax-free, so it is highly advisable to put your money into a TFSA as a starting point to your investing. The money can also be invested into funds, offshore equity funds, and all of that. There's no limitation to what you can invest in with a TFSA. Retirement annuity, it's a long-term investment, can only take the money out at 55. Another nice thing about a retirement annuity is that you are allowed to claim back 17.5% from SARS at the end of your tax year to say that you are investing in a retirement annuity. This is a tax deductible expense, and you can, so I mean, it's basically a free investment. If you are earning 100 grand a year, you can put in 17.5 grand a year, and you're going to get that money back from SARS. Otherwise, you can just give SARS your money. It's up to you. Endowment plans, these are long-term plans as well, 5 or 10 years. It's a investment bucket, I can say, that is really there for those that are quite high income. If you are not within the top tax bracket, 45%, then I won't recommend an endowment plan to you. The tax on an endowment plan is 20% capital gains tax, meaning that if you take out, say, 100,000 from your endowment plan, they're going to deduct 20,000 immediately. So if you were only to be investing, say, 20,000 Rand a year, put it into a flexible investment, can take that money out anytime without any implications. Risk benefits, I think we have spoken about that a lot tonight. If there's any other questions about risk benefits, then please ask me. Short term is the boring one for me. Objects, insuring objects and things. There's not much more to say about it. You're insuring a object for a lump sum. If it gets damaged or stolen, you'll get paid out. Not much more to say on that one. So tax planning, I'll hand it back over to Millycent. She's the expert on tax.
Okay, thank you, Josh, for such a informative session. I hope so. You guys can just put in the comments what you've learned, because I would definitely say it's an informative session, because obviously Josh has been invited by me, so I might not be fair. I might be biased on this one. So just put it on the comment what you've learned, and yeah. But otherwise, just before I get into the tax planning, the purpose is the fact that we need to really think deep and hard about our financial plan and about our financial goals, because our financial goals informs how we gonna enjoy to be entrepreneurs. Entrepreneurs in South Africa are seen to be like, what's the right word? Like we because there's no employment, So we are forced into entrepreneurship, and we are just there to make the little that we could. But it's an enjoyable exercise. I wish I was in Silicon Valley. I was going to say it very well and proper. Silicon Valley is actually in America, where the Mark Zuckerberg of this world are placed. So you can imagine. So being an entrepreneur should be fulfilling rather than buy and buy and buy. So having this conversation helps us to really say, I can do this, I cannot do this yet, but otherwise I know my options. And for our employees, because even as Africans, when if your employee was to pass on, the parents know that the employee is working there, they would actually expect something. So imagine you taking a policy. Obviously, we don't encourage what's happening about policies, and you know that your employee is secured, and sometimes your employee works for you for 20 years as a small business. There's no retirement, there's no pension fund, provident fund. When they leave, it's like they just leaving. So these things, we can think deep and hard about them, and it could actually fulfill our employees as well, because financial planning is really an individual thing. So we need to think also for our employees. Now let's go into the interesting part. I'm a tax practitioner by profession. It comes with my qualifications. So I am talking about tax planning. Tax planning is an issue that as Africans specifically we don't know of, and we don't do more, and it makes us act like when SARS comes after 3 years and they put a bill of 3 million on your table, you know, guess what? You say, Banloile, in my language, you say they bewitched me. Like they want my business to close. Hey, SARS, why is SARS coming when I don't have money or when I'm struggling? I've literally seen most business go down. There is 2 or 3 business that I know of that I was part of their tax appeals, that they literally went down because they did not do tax right. And tax is actually an act that is in South Africa that says you need to pay tax. So someone has to pay tax, either the employee, the company, the director, somebody takes an ownership, or indirectly the customer through VAT. So, but the business has the owners to maintain the tax administration of a lot of things. So as a director, whenever you are about to purchase an asset, ask yourself, is this asset a business asset or is it a personal asset? I recently experienced a close colleague who bought a Mercedes Benz. It's very nice. But I was wondering in my head, does my close associate know that this car is raising their tax bracket? Automatically, they're going to 45%. And they could have planned it in a different way. There's different scenarios that comes from the Tax Act. The Tax Act is a very fair act. It has scenarios to talk to directors. It has scenarios to talk to businesses. What can you deduct? What can you not deduct? When can you deduct? And when can you not deduct? So those things are called tax planning, is to use the Tax Act to plan so that you can actually pay less tax. It's allowed. I just always struggle with the right word. Is it tax avoidance or tax evasion? So Lindy, you can help me here. What's the right word that we use? Is it avoidance or evasion? I think it's avoidance. But Lindy can help me. She's also in my field. So we need to use that to actually plan our finances, and that goes also to our personal finances. So we need to understand the tax structures and the tax implication. When I take a dividend, for example, as a director, let's say my policy as a director is that I'm going to take a dividend every 3 months. Dividends are taxed at 20%, right? But when I get a salary, and my salary goes into a tax bracket of 45%. Let's say, for example, I'm lecturing on the other side. So I get an employment income on my lecturing. So my employment income, maybe it's already, oh, I wish, it's already on the highest tax bracket. When I get a salary from the legacy center, it's increasing the tax bracket. So it means when I take a salary from my business, it is actually not helping me. It's actually, I'm going to be taxed more because now I'm taxed as an individual. But when I take a dividend, the dividend is a good, better option because I'm going to be taxed 20%. Okay, so you can actually now understand that, okay, like before I do anything, I need to think which scenario is better for me. Should I take it as a salary? Should I take it as a dividend? Should I consider other alternatives? Should I donate to a public benefit organization? So what are those scenarios? So it's per scenario, when I buy a car, is it a motor vehicle as defined? We always, the Tax Act has a definition of motor vehicles. Is it a motor vehicle that is defined that I can claim from my business, or is a motor vehicle that is not allowed? Then it will be claimed in my name. And when it's claimed in my name, it's increasing my tax bracket. And what is the implication? I know that we always have this mindset, I work hard, I deserve to drive this. Yes, you do. But did you understand the tax implication? Guess what? SARS doesn't come now, and they know your bank account. They know the business declaration, what you submit on SARS. They know you are the director. They know your bank statements. They know which credits you have. Now they're actually coming up with a special unit that will deal with people, directors, because a lot of us as directors, we are good with the business because we need the tax clearance, but us as the person, we are not good. So we need to think deep and hard about ourselves and our tax issues ourselves, me included. I'm preaching to myself as well. So you need to ask yourself those questions. Am I really, when I buy this, what is the impact? Is it deductible in the business? It's gonna be paid by me, or is it taxed in the business and I'm enjoying it through the business? And we also pay a provisional tax as directors. So what does it mean? When should I submit? So I can go on and on about tax planning because I'm passionate about it. I see a lot of business go down. And as an accountant and a tax practitioner, sometimes I get blamed as people thinking, how could you not help me? And it's too late already. I actually am sitting with an appeal where the company is being audited for 2013, 14, 15, and 16. These are past years, 7 years back. And SARS has given them a huge bill, like a big organization. So you can imagine now they didn't even have auditors, they were submitting and. So I'm urging us in this platform to consider our tax planning, to be very, very careful about it, to be very, very intentional about it, to understand the tax implication of anything that we do. The good thing about being a director in corporate is that you don't have an argument. Your tax, when they say you earn 1.3 million or they like 2 million, I'm sure most of us will be sitting into 2 million if we're working in corporate. You were already in the highest tax bracket. They don't ask you, they structure your income, they take your tax. But with us entrepreneurs, when you get money in an account, the first thing you think of, let me pay these people, let me pay this one, let me pay the debts, let me pay the car, let me pay the house. And then you actually don't understand the implication there. SARS comes and say, we are auditing you. They want the bank statement. They see school fees there. They put it to your name. They see car, your name. They see lunch. Even entertainment is not everything in entertainment that is allowed. They see a lot of entertainment. They have a threshold. It's above the threshold, the rest sits with you. So you can imagine your tax bill, you are owing SARS 5 million. We urge you to pay in the next 3 months or else. And that or else will be implemented because it is an act. You can go into prison. You can affect your entrepreneurship, and entrepreneurship becomes sour. So thank you. Obviously, things that you can use for tax planning is contributing to a retirement fund, using a tax-free savings account. Josh already spoke about it. Donating to a SARS registered charity. Yes, donations. Yeah, when we give to church, we should get a tax benefit. When we give to other people, we know we are generous people. When we give, do they have a PBO that we can actually claim? medical scheme, keep a logbook for your travels, keep your receipts for your subsistence allowance, and those things will help you. Okay, I am very passionate about this one because I see a lot of businesses. About us, we are the Legacy Center. We are registered with various professional bodies, and that makes us abide to ethical code of ethics. And most of you have worked with me, so it's just about us. And then contact details. That's our contact details as the Legacy Center and the contact details of Josh. So